Hello everyone, I'm Mark Sane and welcome to Sane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 36 of the Forex market review. Today we're going to take a look at a few trades I mentioned last week and to see how they delivered. Two of them have delivered, one unfortunately hasn't delivered due to some poor US payroll news. And we were expecting some good numbers to come out of the market. Unfortunately, that did not occur. So let's look at those charts and look at a couple extra charts which may be occurring this week and to see if we can get into those trades and where they may deliver. Without any ado, let's jump to the charts. The first chart we're going to start on is the EURUSD. We're starting on this chart because last week we mentioned that the euro possibly could be pushing for a new move lower. Now that new move lower did not occur, however, it still delivered if you had the tight stop loss in order. So starting on the daily chart, we're looking at this possible push move lower. We jump to the 4-hour chart and what we're looking for is divergence. So we had our higher high in price with our lower AO. This is where I was mentioning that the AO wasn't as low as I would have liked. However, it was still a valid trade. What we then saw was an A, B, C, and then 1, 2, 3 movement lower, ready for a pullback, and then another further pushback lower. We then jumped down to the 1-hour chart, and if I just scroll back a little bit on the 1-hour chart, we also had the divergence on that higher time frame, but not on the lower time frame, the 1-hour chart. So with this movement being A, B, C, 1 up for 2, 2 cannot break the highs of 1, which it hasn't, but it normally comes back to about the 61.8, so it spiked a little bit higher. We then want to look for the wave 3. Wave 3 is the first largest AO. So as we see this first large AO forming, so you've got this one and then the first one forming. When it comes back to zero line, we know that's the bottom of wave 3. It's moving back for wave 4. And what we want to do is look for an entry around the 50% Fibonacci retracement mark. So this was the level here, Fibonacci 50%. So if you had your entry levels around there, as the non-farm payroll numbers came out, we saw a big spike higher. That would have taken you into the trade around the 50% mark. You would have put your stop losses somewhere up here around 50 to 60 pips. The reason why I say that is because wave 4 cannot come into wave 1 territory. So this is 1 up for 2. So if it starts coming into these levels here or above the 61.8, then it's no longer a valid trade. So entry there, stop losses up here around 50 to 60 pips. It delivered 90 pips. So if you had a stop loss of 60, you would have made your 1 to 1.5. If you had a stop loss of 50, you easily made your 1 to 1.5. Trying to go for 2, but that didn't occur. Worst case scenario, you should have brought your stop loss to break even, and then a zigzag announcement, and then the announcement overnight, but the ISM manufacturing, that would have stopped you at break even. So if you weren't able to deliver a 1 to 1.5 risk to reward, hopefully you still got a break even trade. Now this still hasn't technically closed into this area up here, so quite possibly could be moving lower, but I'd be liking to see this on more of a 4-hour chart. So this is 3 up for 4, but if we start seeing close up in these levels, you definitely would discontinue the trade. I personally will not be looking for another trade on this one. The next one is the euro pound, looking for a push back lower. Again, we started on our 4-hour chart. We wanted to see the higher high in price with the lower AO. And when we saw that, we then jumped down to the 1-hour chart. We'll just scroll back, and what we saw was again higher high in price and a lower AO. So this one had a lot of a deeper AO, so it was a lot smaller as this rose higher. So that was a bit more of a trade I liked. What we then want to see is the wave 1, wave 2, again using your Fibonacci retracement tool from 1 to 2, start of 1 to the bottom of 1. It should pull back about 61.8, which it did. It came into this DSR resistance area on the daily time frame and started to push back lower. So as it pushes back lower and gives you the wave 3, so wave 3 being the first large AO, here's your 1 and here's your first large AO. When it comes back to the zero line, we want to see to pull back to a minimum of 38.2%. It did that. It then traveled sideways a bit, and because of this 200 EMA line, that would have given you inclination to possibly look at taking an order around about these levels here. I personally took an order around these levels here, having stop losses up in this wave 1 territory. So this is 1 up for 2, so having stop losses somewhere up here around 80 pips, going for 160, and down the bottom here it delivered 175, 180. So it's easily delivered its 1 for 2. If you were a bit more conservative and put your stop losses above here of around 160 pips, then you probably wanted to see around 240. So, you know, getting around 230 for 1 to 1.5. Almost probably got there. Seeing this DSR level here on the daily time frame. So you definitely would want to be looking at getting out around about this level here. So you could have easily delivered either 1 to 1.5 or 1 to 2, depending on how tight your stop losses was. So that was another successful trade. Then we had the New Zealand USD. Unfortunately, that was not a successful trade, even though we had our divergence with on the daily time frame as well, higher high in price and the lower AO. We then look down to the 4-hour chart. We see the same thing, higher high in price with the lower AO. There's your higher price, there's your lower AO, was down to these levels here. My apologies, this is where it was originally. And then we drop down to the 1-hour chart and we would have seen the higher high in price with the lower AO. We then want to look for the first large AO. Now here on the 1-hour chart we can't see 1 and 2. We can only see this first large AO, so we assume that's 3. So down for 3, up for 4, and then it came back for 5. Because it came above the zero line, we assume that's 4 and down for 5. So you would have grabbed your Fibonacci retracement tool from up there. You would have dropped it down. You would have seen it didn't pull back to 38.2. So you may have not taken this trade at all. But then you might have looked at the 4-hour chart and thought to yourself, look, I think it's probably could be a 1 coming back for 2. Let me see how far it could go. And you might have still took the trade. I personally still took the trade. I ignored this little hump in here and just called all of this as 3. Watched it pull back to these levels up here. Put my entry in. Put my stop losses back into roughly where 1, 2 territory was. So wave 1 around about 76, about these levels here. Unfortunately, I was stopped out, so that was a losing trade for myself. Risk 60 pips, and I was trying to go for 90 pips. So it was about 50 something to go down to the bottoms down here and a bit lower. Unfortunately, that did not occur. I was stopped out with those poor non-farm payroll news. And with the continuation of the ISM manufacturing news being poor again for the US dollar, we've seen it push even higher. Why does it have so much strength? Well, the New Zealand dollar interest rate is at 2%, and you know, if you're anywhere around the world, nobody's paying you 2% interest rate for putting your money in the bank. Even in Australia, it's 1.5, and other countries is almost 0%. Some countries negative, costs you money to keep in the bank. So that's the reason why it's just skyrockets when it does, is because if the US dollars, Fed's not going to increase interest rates, we're not going to see the weakness here. And that's very unlikely to occur in Fed, and it may not occur until December, which will be the next one. The pound Aussie and the gold is a 2 trade setting up for this week. So we currently see this large AO on the daily chart, so it's probably going to be stepping back higher. How high do we think it's going to step? Well, if we assume all of this is wave number 3, this is 1 up for 2 down for 3, it's probably going to pull back to this DSR level around here. Maybe this one here, but I'd be looking at getting out around those levels there. Now, as you can see, it's currently there at the moment. However, we do look at the trade as it being a trade. So we'll look for a lower low in price and the higher AO. So therefore that's the reason why it has stepped up if you're buying it. And this was mentioned a while ago to look at considering buying this trade. And if you did purchase this one, you would have easily delivered to your DSR level and your 1 for 2 risk for reward. So what we want to look for now, if we zoom in a little bit tighter, is we can see a AI divergence in the opposite trend now. Again, it's not as low as I expected for the second one, but it's still divergence. So it's very similar to the euro. Drop down to the 1 hour chart. We don't have any divergence on the 1 hour chart. And on the 15-minute chart, scrolling back, we don't have any divergence. So it's just the 4-hour divergence we have. So what we want to do is look for our large movement down. So at the moment we've just seen this ABC cycle, or ABC. It's still hard to determine at the moment. These aren't really large AOs. However, we can see an ABC. Maybe this is 1, 2, down for 3. If we see a nice movement all the way down with a new large AO forming, that will be the good wave 3. That's then when we use our Fibonacci retracement tool, look for the pullback, then put our stop losses up in those areas there and try to make 1 for 2 risk for reward if we can. So this one in very early stages, I just wanted to point it out, pound Aussie could possibly be moving lower, but if it starts stepping up higher and makes a new high with a new divergence, you watch it from there. So at this stage, it hasn't broken this 200 EMA line, it hasn't broken the resistance areas. It's just because it's hitting this DSR level up here, it's very likely we could be pushing back lower. So just keep that in the back of your head of future trade coming up late this week or early next week. The next one is the XAUUSD, which is the gold. So what we want to see drop down to the 4-hour chart is our divergence. So what we want to do, if I zoom in just a little bit, we're going to see the higher high in price with the lower AO. Drop down to the 1-hour chart. We're going to see our higher AO with our lower price. And do we have divergence on the 15-minute chart? Scroll back a bit. And looks like we do. Our lower price with our higher AO. So that we do have some divergence here. So jumping back to the 1-hour chart, which we like to look at, we have 1 down for 2, up for 3. So grab our Fibonacci retracement tool from the start of 3 to the end of 3. We don't know it's the end until this comes back to the 0 line. But if this doesn't go any higher than this and it started to zigzag its way back lower, then we possibly could be seeing a potential purchase down around these levels here and here. So keep an eye on this one, but you'd want tight stop losses. If it comes back to the 50% mark, you probably want a nice, 120, 125 pip stop loss for 250 to these highs because of this DSR level here. I can't see it going much higher than that there, so I wouldn't be having a big stop loss down the bottom here. Have a nice tight stop loss. So thank you for that. That was week 36 of the Forex market review. Please pause the video, rewind, and go over it again in your own time. We wish you all the best in your success. Take care. Bye-bye.